Today we're going to talk about the macro environment and whether or not we're headed into a recession. So here we have the S&P 500, Bitcoin, federal funds rate, the unemployment rate, inflation, or really the CPI, and M2, which is the money supply. So what you'll notice right now is that the Fed is raising rates, unemployment is flat, inflation's going up, and currently the money supply is about flat as well. Now normally, even if you look at the COVID drop, so the market goes down, the Fed is lowering rates to try to increase demand, unemployment is spiking, and you'll even see a little dip here in inflation. Same thing with right here. Federal funds rate is going down, unemployment is going up, inflation is going down. Same thing right here. Federal funds rate's going down, unemployment's going up, inflation going down. The reason for this is because in a recession, normally there's less demand in the economy, people are losing their jobs, there's less money flowing around. So the Fed tries to counter this by decreasing rates, by making it cheaper to borrow money for cars, for your business, for your house, for whatever. They try to increase demand by lowering rates. Well, when inflation is really high, they want to decrease demand, not increase it. So right now they're trying to increase the rate in order to decrease demand. The problem is we also have supply chain constraints, which they can't do anything about. But regardless, they have to get inflation under control because they have two really primary objectives, the Fed, and that is to try to keep inflation and unemployment under control. So if unemployment is flat and inflation is going up, they're just going to keep raising rates. Now, something that could force their hand is if we were to see a spike in unemployment. Then they might not have much of a choice but to start decreasing rates again, especially because a spike in unemployment would cause the inflation rate to start to go down because as people lose their jobs, they have less money. And if they have less money, they're not going to be buying as many things, which should, in theory, reduce prices. So what we're going to do is also look at what happened during the 70s, which was an inflationary decade. And you notice that the market was very kangaroo-ish. This is the S&P. We don't even really have to look at Bitcoin for this. But what you'll notice here is that when the federal funds rate peaks and when inflation peaks, that tends to mark bottoms right here, or at least when the federal fund starts to lower rates again. So here they actually started lowering them back here, but the market didn't bottom yet. Unemployment started going up, inflation peaked. Same thing with right here. The Federal Reserve started lowering rates, unemployment started going up, and inflation peaked right here. So it's kind of interesting because if you were to see the unemployment rate start going up, that might indicate that the stock market bottom is actually in. And if the stock market bottom is in, then that would mean that Bitcoin's bottom is probably in. And actually, Bitcoin tends to react a little bit sooner than the stock market. So when inflation peaks, unemployment starts to go up, and the Federal Reserve is lowering rates, that's a sign of a macro bottom. Now the news will continue to get worse. The real economy, like people, losing their jobs and things, will also continue to get worse. But the market will already have priced all that in and will actually start to go up. I think the question really is unemployment going to spike? And I don't, it's hard to say. You can't. I think it's better to not try to predict these things, but just wait and see what happens. So, how do we know if inflation is peaking here? One way to do that is to look at commodities. And so here's sugar, cocoa, cotton, lumber, corn, wheat. I can't remember what this is. Let's see. Soybean oil. Here's cattle. This is gold, copper, silver, platinum. This is crude oil, which is what here in the US what we use, and this is Brent oil, which is what they use in the UK, Europe, and I think Africa. Here's natural gas. Here's RBOB, which is a mixing component in gasoline. So what you'll notice is that for the month of June, pretty much everything went down, or at least most things. Lumber was basically flat. Corn, wheat, soybean oil, cattle, flat. Gold, copper, silver, platinum, everything down. Crude oil down, same thing, just all energy was pretty much down. Now for the month of July, oil's down, Brent oil is slightly down, natural gas is actually up, and RBOB is currently down a little bit as well. All metals are down, or yeah, all metals are pretty much down, maybe slightly flat. Commodities over here, pretty much flat and flat. So commodities are, in a way, a precursor to inflation, or the CPI, I should say, which is, most people just use them interchangeably, but I guess we should be specific and say the CPI. And the reason for that is because they're basically the raw materials that go into the goods on a shelf in a grocery store, and whatever else, furniture. I don't know, maybe furniture is a bad example, but there's a lag here. So because if a company pays commodity prices for let's say the month of June, they might not be selling the actual product, or the product may not land on a shelf until July or something like that. So given that everything is pretty much in a macro downtrend, if you look at the highs of just from where everything was at one point, so this should play a role in lowering the CPI. I think the big one is oil. So as long as this remains in a downtrend, and if this level is actually able to break 94 and hold it, not just like, wick below, then that could be a really, really good sign that inflation has peaked. So the next thing here is United States single-family home prices. This is rents, and this is used cars and trucks, the prices. So what you'll notice here is that home prices tend to peak in June. You'll notice just over and over again, pretty much every single year, they peak in June, and that'll probably be the same here as well. I don't even know if this has the June in there yet, but housing is very seasonal, so that's kind of nice how we have the housing market likely to start going down, which should lower the CPI, I think, a little bit. I believe single-family home prices are included in the CPI. And then these are rent prices, which don't really ever go down. You'll notice that houses don't really ever go down either, except for in 2008. And during 2008 or 2009, I think, really, rent prices just went flat. And back in the 70s, in case you're curious, which was an inflationary decade, single-family home prices never really went down. They just went parabolic, and then they just started a linear path. So I don't know if we're really going to see a huge drop in home prices. We might just see this start to level off a little bit. And then here's used vehicles. This looks like it might be leveling off as well. And there's a huge spike here, likely due to a shortage in new vehicles. Finally, we have the DXY, which is the dollar currency index. And what you'll notice is that it's been in a pretty strong rise recently, and that's because pretty much every world currency has been going down. So here's China, Europe, Japan, the UK. I think this is South Korea's currency, India, Australia, Canada, and Kuwait. I just put on there. Every single one is in a downtrend pretty much. And so yeah, the dollar is the world reserve currency, I suppose. Countries or people flock to the dollar when there's global inflation. And what you'll notice is that, generally speaking, when the dollar is in an uptrend, Bitcoin is in a downtrend. But it can rally, even if the dollar is in an uptrend, or in a slight, or kind of flat. So you'll notice right here there was a rally, and the dollar was just still kind of trading up, but So that's all I have to say about that. It's hopefully this thing can turn around soon. That would be ideal for Bitcoin as well as the stock market. And you'll notice that, and you probably heard about this, is that the euro actually recently hit 1-to-1 with the dollar, which is Last time that happened was I don't know, a very long time ago. Alright, that's it for this video.